All right. And as always, some other people may jump in because that's just how it works. All right. So we have Sarah and Rob on the line from Novus Mortgage. You guys know Sarah. Rob works alongside Sarah, does a lot of renovation loans, a lot of types of products that are not really mainstream, but I think it's really important for you guys to know about because I've had a ton of success with them when I was an agent, especially a new agent trying to kind of find my niche in the market. And we get a lot of questions about renovation style loans, or I have this client that fell in love with this home and they're an FHA buyer, but it's not going to pass. I don't know what to do. I feel like I'm breaking their heart. They do have options, and I don't think that a lot of agents know about the options that are available that can really, one, serve your client in a really powerful way. Instead of telling them, you can't have this, let's find you a house that you don't want. Make the house fit the client. Don't make the client fit the house. So I think that's super powerful. It adds to your value proposition of how you're serving your clients. And I think it's an untapped niche in our market that really needs to come back. So, and I think it will make its comeback. So I'm going to quit talking. I'm going to turn it over to Rob, and we'll get prepared to learn some good stuff.
Well, thank you so much. I appreciate the kind words. Am I able to do a screen share that you guys could see all of my stuff here?
You can. Down, it's the very middle button. It has a computer screen with an arrow on it.
All right, I see it, and I am clicking it now. So let me know if you guys see my stuff.
Got it.
All right, so I have a PowerPoint presentation that I do. I'm not going to go through the whole thing, guys. I'm going to jump around all over the place. So, you know, if something kind of catches your eye, jump in, say something to me. You know, we can kind of backtrack and you know, do some exploring if that's what you need to do. Also, I do like for these to sort of be interactive. So questions are welcomed. I think we kind of all learn best by, you know, talking about some, you know, things that you've experienced and things like that. So if you just got on the call, you probably missed the beginning where Christina was talking about how she used to do a lot of these in 2010, which was sort of coming out of the crash in 08, where there were a lot of foreclosed properties and banks and lenders just sort of dumped them onto the market. It kind of crashed the market a little bit, but it was a great opportunity for renovation lending. We haven't really been in that market for probably like 5-6 years now. Like, we've been in a more of a, you know, conventional market where, you know, people are paying above asking price and no inspections, and renovation loans just aren't all that appealing to sellers, and not getting pitched, you know, to a seller and to a listing agent. So I do, however, think we are in a market that is starting to see a bit of a comeback for renovation lending. And I'm going to get to the slide that addresses it here, if I can actually advance these at all. Just jump around on a bunch of these, but basically, this is the one I wanted to get to. U.S. banks are sitting on about $750 billion in losses. Okay, so much of that was kind of, you know, came out through COVID and things of that nature. Now, that $750 billion is roughly 7 times more than what the banks held in 08. Okay, so just, you know, do that math for a second and think what, you know, if Christina did 20 of these things in 2010, like, think of what that impact would be to the market if we are, you know, 7 times that inventory. Now, look, a lot of that inventory is going to be commercial properties, and I get that, but even if the residential stuff, you know, makes up 30% of that, you know, that would more than double that experience that Christina had. And now there's less realtors than there were at that point. So, that should mean stuff is coming for us. Foreclosed properties are coming onto the market. You may have already started to see a fair amount of them already. So if you're a real estate agent and you're not positioned to know how to accept these offers or present these offers, you're going to be at a competitive disadvantage. The one thing I will say about a renovation loan is if you have a buyer that's considering doing one, it matters how you present it to the realtor, or to the listing agent. Don't present it as just a FHA loan. Make sure they know that it's a renovation loan. Make sure that they understand that the seller is off the hook. They don't have to do anything. They don't have to scrape and paint a windowsill and put in a new GFI outlet and a handrail to the basement stairs. That is now on the buyer, and that's part of what we'll be talking about here, okay? These basically allow you to buy a home in any condition. So really, like, a basket case is perfectly suitable. I don't have a problem with, a gut demo and rebuild. As long as we're on the existing footprint, we have the ability to do a renovation loan for that home. Additionally, one thing that we have started to encounter, I don't even have a slide for this one. This is happening so new to us. We are getting pushback from the investors that we sell our loans to. They are now, even from, Fannie and Freddie investors, are telling us that they are applying an FHA condition template to conventional houses now. So you may not have experienced this yet. It's kind of just coming for us as lenders, and you're going to start seeing some tougher underwriting conditions as it comes to property condition. But the days of taking a loan and pushing it through as a conventional loan, and they don't have, one bedroom's missing carpet, or we've got bare drywall that hasn't been painted yet, you're going to start seeing pushback from that from your lenders. And it's something that, you want to be prepared for. If you don't have the pieces in place, like, that thing is now going to either require a repair escrow, the seller's going to have to fix it, or if it's a fairly significant amount of stuff, you're probably going to have to look at doing a renovation loan on that. So I don't know, Sarah, if you want to kind of expand on that, if you've encountered that yet too much in your market. But I'm seeing a lot of stuff that's been coming my way that, hey, we started doing this loan as a conventional loan. The underwriter saw a bunch of stuff on the appraisal, and now we have to flip it to a renovation loan. So it's happening to me a ton, and I don't know if you guys have encountered that at all yet.
Yeah, I think the main misconception is that it's not the underwriter, it's the fact that Fannie and Freddie are coming out with new policies. And I think a common misconception is that people think, oh, we'll just do a conventional loan and it'll be fine. But the problem is they're deeming a lot of these things as safety issues. So it doesn't matter if it's conventional, FHA, USDA, whatever. It's a safety issue. So, like, I get a lot of times, and we can't do renovation on foundation, but just kind of as an example, if a basement is wet, they're like, oh, we can't go FHA, we have to go conventional because the basement's wet. Well, that doesn't make any sense. That doesn't matter, right? We have to, we can go any kind of loan type. You just have to get a foundation inspection. It's the same thing with, like, chipped and peeling paint. Like, if it's some of these old houses with wood siding and they have chipped and peeling paint outside, then even on a conventional loan, they're deeming that as a safety issue, because essentially if there's no barrier between the wood and the weather, then the water could seep through, get to the electrical, and that could cause a big problem. So I think there's just a lot of things that, they're coming back with, and a lot of it has to do with insurance too, and what insurance is covering and not covering, and, what they're asking for post-closing. So there's just a lot of pivots that have happened, I'd say, in the last year, but especially the last 6 months or so, that this would help for sure. And also, Rob, just so you know, your slide, I don't know if you want us to see, like, your slide with the numbers on it, but we see your main slide. Just so you know.
Wait, which one do you see?
We see the Novus Home Mortgage Renovation Lending Experts one. So I don't know if you had clicked on the second one with all those numbers on it.
Oh.
But just so you know, we can only see that, like, your header slide.
Are you serious?
Yeah, that happened the other day with somebody else too. So I'm like, I bet he doesn't know that. So I don't know if you
You
have
might be
I
on
don't
your
see
wrong
that.
screen. If you have multiple screens, you might be sharing the wrong screen.
Oh, so you might have to just slide it to the other screen.
Ah,
There you go. So now when you did that, now we can see it.
okay, so that's really strange.
Yeah. So
I
anyway,
wanted to add on new restrictions. I was really surprised. We have an agent who is the listing agent on a property that has an underground oil tank, and it's a conventional buyer. And the lender has come back after the appraisal and asked for phase 1 and phase 2 inspections on a residential oil tank. So that's just another example of them really cracking down.
Wow.
I've
Yeah.
never ever had a phase 1, let alone a phase 2 environmental study on something that wasn't commercial before. And this is just a residential home that has never been used for commercial purposes
Yeah.
or a heating tank under the ground.
yeah, that's a lender overlay. So that's not a normal thing because I mean, a lot of the properties, especially out in like the more rural areas in PA, like in Mercer County, Hermitage, West Middlesex, they all have oil heat. And we don't have any of that problem. So that's probably just a lender overlay that they're asking for that. And those environmental things are there's like 1 or 2 guys who does them, and they're expensive. It's silly. So
It is. I was really taken aback. I'm like, they want to do what? They want to do like, because the agent asked me, well, what's a phase 1? She's like, I don't know why, you know what I mean? She's an agent that loves to know all the things. So I'm glad, you know what I mean? She's getting that experience. But I was like, yeah, that's commercial. Like when we sell, industrial or auto shops or old gas stations, then we run into phase 1, phase 2, and phase 3 studies. But yeah, they made him do a commercial environmental study on this house. It was weird.
huh.
Yeah, that's really strange. I've never encountered that. And, I mean, yeah, the buried oil tanks are certainly, worthy of concern, but wow, that's out of pocket. I agree with Sarah. That sounds like a lender overlay because it's not like a HUD or Fannie or Freddie requirement. All right. Well, so I want to just kind of explore a few more things here. I want to go to types of renovation, and I'm going to do it like this, guys, because it seems like trying to share the whole screen thing wasn't working. So I don't know how well you can see that or not, but I'll talk enough to sort of blow through it. So the types of reno loans that we presently offer are the FHA 203K and the Fannie Mae Home Style and Freddie Mac Choice. I kind of lump them together. Later on in 2025, we're hoping to roll out our VA Reno and our USDA Reno. This is a new division for us. We started it up about a year ago. I've kind of built it out. We now have our delegation where we underwrite the loan. So I've got dedicated underwriters, dedicated processors. And it was important to me to have all sort of the right people in place with these. So, we've kind of had sort of a slower rollout, but because of the changes that have happened with Fannie and Freddie, I'm just going to talk about the 203K for our purposes here, but just know that we do have a conventional renovation loan, and we also then have the VA and USDA stuff coming later on this year. But with the 203K, there was a change in November. I don't know if you're aware of this, Christina. This might be news to you as someone who's done a bunch of reno loans before, but there used to be a threshold between the limited and standard 203Ks of $35,000. In November, that moved up to $75,000. Now, you may ask, okay, well, what's the difference between limited and standard? A limited is if we're doing repairs less than $75,000 and they are non-structural in nature, then we can just move forward with that transaction, contractor's estimate, and push and get that thing done. If I'm over $75,000 or if I'm doing structural repairs, I will need to involve a HUD consultant to do an inspection, to prepare a scope of repairs and work write-up report. It's kind of a lengthy sort of process that they put together for me that gets all that in place. I don't mind using a HUD consultant. It's fine. The only issue is it's now an extra cook in the kitchen. And sometimes when you get too many people working on these things, it slows the process down. To that end, for my dollar, the most important person in a renovation transaction is not going to be me. It's not going to be Sarah. It's not going to be you. It's going to be the contractor. All right. The contractor matters the most to me because I need to get him vetted. Number one, I'm trying to find my screen here that has my contractor requirements. I need to get him vetted. So I want him to be licensed and insured. I want him to, ideally, like, you know, if they have like their lead certifications or mold certifications, that's great. A lot of contractors have let that stuff lapse. I get it. I can get them connected with some online courses if we need to just do it for, you know, they get their certification for $40 or whatever. You know, sometimes it's necessary. If I'm working on an older house that has a ton of painting, they are supposed to follow lead protocols and things like that. So, I can connect a contractor with all that if they don't have those things. But we have a vetting process for the contractor. I send them a 2-page application. They fill that out. I then explode that over my full 20-page packet that I send back to them for a digital signature and whatnot. There is no such thing as a HUD approved contractor anymore. At one point on the curve, there used to be HUD used to certify these guys and they would advertise that they were HUD certified. But like anything that the government touches, they couldn't manage that list. You had contractors on there that, you know, had died 20 years earlier or whatever. It just, you know, government inefficiency, you know, poked its ugly head up. So now you have each lender does their own validation for the contractors. And, you know, that's kind of internal with us. We have our own process. It may be different than someone else's. I will say we don't get into their financials. We're not pulling their credit. We're not doing any of that stuff. I am just checking a few references that they provide. I'm going to do a little online searching just to make sure that, you know, we don't have, you know, like I can't in good conscience send someone who's, you know, a convicted pedophile into somebody's house. Like I've had that happen where I've done a search and the contractor has, you know, that on his history. So, you know, I'm not doing that. So I have to let the customer know, hey, this is a problem. So things like that is part of our vetting process for the contractor. And then I will tell people that when you see a house, you know, there's always a little bit of a gray area. Okay, hey, I saw a house I liked. It needs work. Do I get a contractor in there now before I give an offer, or you know, what do we do? And if you can get a contractor in there before making an offer, great. By all means, do it. The chances of you being able to pull in a contractor to get something together that quickly are pretty remote. So here's what we do on our end. Let's take an educated guess at what that house needs. If it's a $200,000 house and, oh, maybe it looks like it needs $50,000 worth of work. Sarah and I will qualify that customer based on that. And they're going to be qualified for what we call a $250,000 total acquisition cost. And then the loan amount will be based on that number. And that's the offer that you submit. Okay. Then once the offer is accepted, you want to get a contractor in there as soon as possible in order to keep us on our timeline. A renovation loan is going to take a little bit longer to get done, typically, just because of that contractor piece. And this is where I say that this contractor is really the most important person in this transaction. Normally, when you sign an agreement of sale, you're probably doing a 30-day contract, right? Well, with a rental loan, I'm probably going to need more like 45 days to get it done. And that's if I have a contractor that is cooperative. When Sarah takes a normal loan in, she's ordering the appraisal right away. With a rental loan, I can't order the appraisal until I know what we're doing to the house. Because the key thing for a renovation loan is that we're lending more money than what we're paying for the house, but we're doing that based upon what we think this house will be worth when the work is done. So again, if I have a $200,000 home that I'm doing $50,000 worth of work to, I want to see that house appraising for north of 250 grand. And the appraiser is going to appraise that home as a sort of a subject to repairs and improvements specified in the contractor's bid. So what I will say to you is get that contractor in there as quickly as you can. And then if I'm then looking for an estimate within 2 weeks of that estimate being, or of that agreement being signed. If I don't have it by then, I haven't been able to order the appraisal yet. You know, if I order an appraisal, and that's going to take about 2 weeks till I get that back. So now I'm about a month down the road, and I really haven't launched this thing into the stratosphere yet. I maybe have a credit approval based upon income and assets, but I haven't really gotten into the meat of the deal, which is the appraisal for me. So the key is getting that contractor in there quickly, getting an estimate back quickly so I can get the appraisal ordered. Okay. And again, that's why I say, give me that 45-day timeline to get that done. Now, what are some things that, you know, you can maybe do in advance of this is if you have contractors that you guys like, send them over to me. Let's talk about getting them set up for us, get them validated ahead of time. If you have a listing that you know is going to, you know, need to have it be a little bit of a distress listing, let's start putting some preliminary bids together to take care of the mandatory type items that HUD often requires. So, you know, those are some preemptive things that you can do to help sort of move things along. I will say to that end, a borrower or buyer is free to use whomever they want. We're not going to sit here and say, hey, you've got to use a contractor from our approved list. Okay, that's not the case. I don't want to do that. That opens up the door to a lot of potential fraud issues, liability concerns, things like that. I want the customer picking a contractor they're comfortable with. How you guys doing?
Am I able to chime in for just a minute?
I was just about to see if there were any questions.
Sorry. So just so that you guys know, because a lot of the agents here have zero experience with renovation loans. So what I used to do, and I don't know if this is the appropriate way to do it or not, because there was no training when I was doing it. I didn't get the estimates first. So if I went into a home and I knew that it needed a roof and it needed a furnace, and then say the clients, like, it had a kitchen, but they didn't like the kitchen, but they wanted to wrap the renovations into the kitchen as well. A simple Google search, back then we had like a book where you can go online. It had like the average estimate of what it was going to cost on a national level to replace these things. And I was able to do a simple spreadsheet of like, okay, client says they want a new furnace. This is a 1,800 square foot home, natural gas furnace. We want a 90% efficiency furnace, like for like switch out. It was going to be X amount of dollars. And it was easy to go into that book, which I paid a small subscription fee for, to find that information. Now with ChatGPT and Copilot that you guys all have access to, it is even easier. So I just did a simple search of 1,800 square foot, 90% efficiency, natural gas furnace, average cost, Western Pennsylvania. It came up $5,000 to $10,000, average is $7,500. And I can tell you that's spot on. I'm getting mine for about $6,500 for my rentals. Just depending on if there's other factors. So it's going to give you a range, like, does the ductwork need to be redone, or, so does it have to be kind of retrofitted into what's there? So there's always these variables. But that way, as a professional, you're able to say, I'm not a contractor. We're going to need to get a contractor in here. But according to the online research, it's saying between 5,000 and 10,000. So let's estimate 10 right now. We can always back that number down when the contractor comes in and says it's going to be 65 or 7,500, but we don't want to estimate 5, because chances of that being, this furnace is older than I am, chances of it being 5 are slim to none. Because they're not going to retrofit it in, they're just going to rip it out and redo it. So those are things that you can do. Just knowing some simple square footage on the property. If there is no square footage because you're up in Mercer County, which there's not, just taking a quick walk, foot for foot across the front of the house and the side of the house will give you its dimensions. You can figure out its general square footage. It's not going to be spot on, but that's a trick I would do as well. Just kind of get yourself some type of, basis to start with. It's not going to be up to you guys to put in these final numbers. You're just coming up with a budget. So you're saying no different than, all right, I got to go grocery shopping. Here's my list. I know I'm going to spend $175 approximately there at the grocery store. When you get to the checkout, maybe it's 150. So it's fine. They're just going to need a window to work with and a shopping list of what needs to be done. And I think that'll save you getting those contractors in ahead of time and potentially losing the deal for the clients because you've taken too long. So make sure you put your inspection contingencies in there, your mortgage contingencies in there. It buys you time. Give yourself a little extra time too, because this is a renovation loan. You're going to have to coordinate with a lot of different people and there's a lot of moving parts. Sorry, just my 2 cents.
Oh, I love that. You could actually call that 10 cents because that was some great info. I appreciate it. So, and to that end, I wanted to jump in a little bit on that, change up my presentation here a little bit. Using the technology has just been coming fast and furious, and I use it, constantly with renovation loans. So, you're using ChatGPT to do pricing. I actually have some software that I utilize to do the exact same thing you were talking about, because again, I don't typically talk to people that have sort of that depth of experience that you have, Christina. So, they'll come to me and say, well, I don't know what it needs. So we have a conversation. All right, well, what do you want? Let me look at the online pictures, try and make a determination on what it needs. I know those aren't always the best, most honest portrayals of a home, but using AI has become a big thing for us. And this is just one of the things that we do. I've been helping some of our loan officers helping listing agents with a distressed home. We're listing it with Reno in mind. And I don't know how well you can see this flyer, but essentially what I do is I take the online photos, I run them through an AI and, create sort of a picture of what the house could potentially be. And AI does some funny things. Sometimes it'll throw a sink in where one doesn't belong, but this will just kind of give you an idea of what it would look like. And, with customers, they, especially nowadays, they seem to lack vision. Like people kind of don't have, they just don't have vision. They can't see the bigger picture. So to show that to them is helpful in getting the sale. And then from there, in addition to showing, potential for the home and what it could be, we show them the numbers. We show them how the deal comes together, which is, the purchase price, a renovation budget, what the payment would be with that, what the down payment would be with that. So that's just something that we're kind of doing on our end. And, I find it sort of has really helped people kind of recognize, what they're doing and what the potential for a distressed home could be.
Rob.
Yes.
Yes, if you don't mind, that's fantastic. By the way, that last slide and how you put that together for the client, that's fantastic.
Thank you.
So you mentioned earlier, so I have 2 distress listings, and you just mentioned at least wherever you're at in the stage, but getting the bid process started. So do you have an outline on how, if we do have distressed properties, we can at least, get the ball rolling?
Yeah. So you got to look at it from two standpoints here is what does the house need versus what does the client want? So, you have a needs list and a wish list. Okay. The needs list is going to be stuff that's related to safety and structural integrity. What you have to understand though is interpret what Sarah brought it up earlier. Structural integrity, it can actually be something like, well, we don't have, we have peeling paint on a wood sided house. And you might think to yourself, well, that's not structural, that's a cosmetic. The issue is if I have a bare surface, an unfinished surface, that's a place where water could penetrate. And now penetrating water is going to open the door to rot and mold and things like that. That's the structural component of it. So while I'm not saying that painting something is a structural fix, the structural integrity could be compromised. So if we have peeling paint, if we have bare drywall, if we have torn vinyl in the kitchen floor, those are all places for water to get in and start doing its thing, which is never good. So that would all that kind of stuff has to be addressed as part of a renovation loan. Additionally, then the safety stuff, you know, no GFI outlets next to the kitchen sink, no handrail going down to the basement stairs, or, you know, like an open stair, you know, in an older home, things like that, or those are all safety related. If a toddler can fall through a spindle, if the spindles are too far apart, safety issues. So I actually do have a what I call a HUD repairs checklist that I could send to Christina after the call. She could distribute out to you guys. It was put together for me years ago by a HUD consultant, and it will tell a contractor or you or a buyer, hey, these things on this list, if these are deficient, these have to be repaired. And it addresses all of that kind of stuff. So it'll sort of lead you to the immediate needs. And then if you want to do the sexy stuff, you know, hey, we're going to take care of, you know, the handrail, the GFI outlets, and the peeling paint, but I also want to put in stainless steel appliances in the kitchen with granite countertops and new cabinets. We can do all that stuff too with a renovation loan, as long as we're adding to value. You know, as long as the value's building, then I'm good with it. Okay. What you don't want to do is overspend. You know, nobody wants to do that. So, you know, solid gold toilets, probably not a great investment. Not going to get a great return on your dollar. But, you know, if you're doing the right improvements, you're going to see impact to your value. Does that answer your question?
Great. Yeah, great. Thank you.
Who approves those? Like, basically, when you choose what you want to do with like the renovations, like who approves those? Is there a limit? Is the limit just what the house could potentially, you know, appraise for once you do those renovations? Like,
Yeah, exactly. So, you know, fantastic question. And you're 100% correct that the improvements are really only limited by the return on the investment. You know, the return on what we're doing. As long as it's translating to value, then I shouldn't have an issue. Okay, so if we're buying a $200,000 house, I keep using this. I don't know why this person keeps calling me. If we're buying a $200,000 house, you put $50,000 into it. I want to see a house that's going to be worth north of $250,000. Okay. My God, take a hit, buddy. Sorry, somebody keeps calling through on my Teams call here. I don't know if you guys see that popping up or not, but it's driving me crazy. So yeah, so you know, that's really sort of the determining factor. Now, the appraiser in most cases is the person who determines the mandatory repairs, but we kind of have to get out in front of it a little bit. So it's possible that, you know, the contractor, I'm going to try and guide them to what those mandatory repairs are. They put an estimate together. We send that to the appraiser. Then the appraiser goes out and says, hey, this is great, but you missed a couple of things and we need to add those things to the estimate. So you just bear that in mind, that that's kind of a step in the process. The appraiser is considered a representative of HUD, and they know what the mandatory repairs are that we require. I try to get out in front of it a little bit and direct the contractor to those by showing them that mandatory repairs list. Oh, my goodness. But you know, it is a little bit of it feels a little backwards sometimes. You kind of feel like, oh, why can't I just get the appraiser out right away to tell us what needs to be repaired? And it doesn't quite work that way. I wish it did, but I need to have that contractor's bid in order to get the appraiser out there. Does that answer your question, Rebecca?
Yes, thank you.
All right, perfect. Christine, am I okay on time? I don't want to monopolize everybody's time. I could go on for like hours talking about this stuff, and I don't want to do that. So, like,
yeah, no, you're good. The meeting will shut down at 11, so we still got about 20 minutes.
Okay, is that all for me, or do you have stuff to go over too?
No, you're fine. Nope, this is all about renovation. So
okay, perfect. All right, so what I want to do now is just sort of show you guys a little bit of how the numbers come together. And sort of what we do on our end, and just explain a little bit about how Sarah and I will work on a deal like this. So if you have a renovation loan come under contract, Sarah is still sort of, you know, your primary person on this. She's working with all things customer related. So she's working on their income, their assets, their credit. I'm handling all things renovation related. So I'm dealing with the contractor, the estimate, the appraiser, and sort of putting all those pieces in place. Okay. So the reason we do it that way is these loans are so kind of nuanced and have little weird twists to them that if a loan officer isn't touching one of these things multiple times a year, they're going to miss something. They're going to forget something. And now we as a lender have a loan that may be unsaleable, and that's not good for us. So we work it as a tag team. So I'll handle the renovation piece. Sarah will handle the customer piece. You know, she's your contact. If we need to kind of get a round table together and talk with a borrower and stuff like that, I'm more than happy to do that. I love to do that. But initially, you know, Sarah's your person. She's your loan officer. She's your contact. But with this house here, for example, this one is a good reno candidate, 3-bedroom, 2-bath, 350,000 sale price. Show you, you know, this one is one I did my, you know, renderings for, show what it could be. You know, very dated, like right out of the 80s, you know, that rose countertops and probably the whitewashed oak cabinets. Again, showing what it could be. And I don't want to kind of mire too much in this stuff, but I want to show you how the numbers come together. What does it need? Kitchen and bath updates, flooring and paint, maybe an exterior facelift. There's a blank slide that I didn't put the numbers in for. That's great, Rob. Yeah, I didn't update this one. Sorry about that, guys. I'm a little bit unprepared there. But the key thing here is I'm showing you how the numbers come together. So if this home had a sale price of $250,000, I'm doing $100,000 improvement. I'm going to layer in something called a contingency reserve into every single one of these transactions. That contingency reserve is a figure that is 10 to 20% of the contractor's bid that I'm putting on top of the loan to cover the what ifs that can arise during a renovation. Okay. Hey, we were getting the bathroom redone. We ripped out the shower surround. Turns out that the caulking hadn't been redone in years, and now water's been penetrating back behind there. And I've got rot, I've got mold, and I have $2,000 worth of damage that I now need to fix. Where's that money coming from? Well, rather than compromising any other portion of the project or having the customer dip into their pocket, we have this contingency money that's set aside that will allow us to pay for those additional repairs without impacting other components of the loan. On a foreclosed house where the utilities are shut off and we're not able to get anything turned on, that contingency reserve has to be at least 15%. A lot of times I just take it to 20 if we have sort of a smaller reno budget, because I'd like to have a fatter contingency there, because sometimes you turn on the water, you know, especially here in you know, the Northeast, you turn on the water and you've got a shower down in the basement because the pipes froze before the bank could get in and winterize it. So, oh, we didn't know we had bust pipes. Well, there's $1,500 of stuff we have to deal with. So this contingency money will be there to take care of that kind of stuff. Additionally, I'm going to roll in all things related to the cost of the renovation. So permits, a consultant if we're using one, draw inspections, draw management fees, things like that are all going to be packed into the loan. And it creates for me what's called a total acquisition cost. So if with those numbers that we're using here, that number becomes $365,000 and change. And that's the number I'm lending off of. My down payment's going to be based upon that number, not the sale price. Okay. So my FHA 3.5% down payment is going to be $12,800. And then my loan amount's $352,958. Okay. So I show you this to help you understand like how it comes together on our end. There's a little bit of a misnomer with renovation loans is that they're more expensive than a typical, you know, FHA loan. And while there are fees associated with them, those fees are built into the loan amount, those inspection fees and things like that. The biggest difference, I think the reason for the misconception is that the down payment ends up being more because the 3.5% calculation is based on the dollar amount of the repairs. So that's where, people say, well, if I was buying a $250,000 house, my down payment's going to be something like, like $9,200, I think, if my brain's doing math correctly, which it may not be. This down payment is $12,800 because we're working off of that total acquisition cost. Does that make sense to everybody?
So down payment is based on the acquisition cost.
Correct.
Okay.
Correct. So one thing that I don't shy away from on renovation loans is that, and Christina, I'm sure you can probably share with this. I talked to so many realtors who, I did one of these back in 1998 and it was a train wreck. It was terrible. Everything went wrong. It was just a mess. And I sort of lean into that. These are all I do. It's all I've done for the last 15 years. And while I won't sit here and say that I haven't had my fair share of train wrecks, what we have done here is sort of build out a process that hopefully eliminates as much of it as possible. Bear in mind, we do have multiple people whose timelines none of us can control. I can't control how fast a contractor moves and things like that. But if you recall what I was saying earlier, how important that contractor is to our process, like truly, 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 that guy is worth his weight in gold. So, I will say that, the two components that matter the most on a renovation loan, that contractor, and then a guy like me that's working in conjunction with Sarah, with the loan officer, to sort of facilitate the renovation component of the transaction. Okay. And that's not me blowing sunshine up my own rear end. That's just me saying to you, if you're going to do a renovation loan, you don't want to go with just a loan officer who's only done a handful of them in their career, or, did one 3 years ago, but hasn't done one since. Okay. You want to deal with somebody that has someone like me kind of, running sidecar with them, that knows the ins and outs of these things, so we can navigate the trouble spots. Okay.
I'd love to chime in on that. I think that's very, very important. So when I did these in 2010, 2011, 2012, I worked with somebody who this is all they did. This is all they did. So they weren't just writing the loan and slapping it together. They were really working as a consultant. And I think it's doubly important because I hear a lot of agents say, I would never do another renovation loan. They are terrible. And when I ask, well, who trained you on how to do them? They're like, well, nobody. The agent has to be equally trained. The agent has to be equally trained. You can't go into it half-assed and not know what you're doing. I mean, one of the biggest missteps you'll find is you need to be upfront with contractors as well and let them know this is a 203K, this is a draw process. There's going to be documents that have to be provided, like their license, their insurance. They're going to be on timelines. There's going to be information they need to provide for the draws. A lot of the contractors, when I was starting to get to know these programs, they're like, well, I want 50% upfront plus all material. Well, that ain't going to happen there, buddy. You do the work, then you put in the paperwork, and then you get paid. So it's important to understand those processes. I would say, and Rob, you can let me know whether you're willing to do this or not, but I would say that if you really want to have this be part of your sales arsenal, where you can fit this into your business and really, expand your reach with clients, is that you schedule a one-on-one time to speak to Rob, so he can really walk you through the processes, not just on the back end. It's important to know how to walk through it on the front end, because what you do on the front is going to determine how well or how poorly the service is going to be on the back end. Because if you just throw spaghetti against the wall, maybe it's going to stick, maybe it's not. But it's important that the agent and the lending team work in unison to make sure that every checkbox gets checked. Because if not every one of those boxes get checked, this thing is not going to close, and it's going to get delayed, and it's going to get delayed, and it's going to get delayed. Also, leave yourself extra time. There's a lot of extra steps. You need to have time. So you need to present it properly to the sellers, saying, hey, we're doing 203K. We're not going to ask for, all of these. We know it kind of is what it is, but for that, we're not going to have a 30-day closing. We're just not. There's not enough time. Leave yourself some breathing room. Under promise and over deliver every time on one of these. Under promise, over deliver. So if you say it's going to take 60 days, you get it done in 40 days, then you look like a freaking hero. So that's just my 2 cents on what I learned, because I fell in that trap I don't know how many times. And the gentleman who I used to work with, who is now long retired, God bless his soul, I don't even know if he's living anymore. But he was a damn saint for putting up with my nonsense. But it was all part of the learning process.
Yeah. So again, great information, great advice. I will say, like, if the contractor's doing stuff quickly, like moving quickly, I can close them in 30 days. I've done some, just recently in 21. Part of what we have going on here now is I've got the dedicated staff, a dedicated underwriter, dedicated processors, that this is all they do for me. So our ability to push these loans through quickly is definitely there. I won't say that, don't promise that we can get something done in 30, because again, we don't control the contractor. But if we have that guy moving along at a good clip, we can get them done quickly. So if you're in a spot where you need to pivot because, the underwriter or the appraiser called out a ton of repairs and you weren't anticipating it on a conventional loan that you've got with XYZ mortgage company, and you've got pricing and you can get pricing together for me and come to Sarah and I and say, hey, this thing needs to close. Like, this is what's going on. Here's what I've got. Can you do it? I'll entertain it. Like, I will push, I'm a hammer and I like to get stuff, closed for you as quickly as possible. Doesn't make any sense for me to cause you delays. So, I'll push as hard and as fast as I can, as long as the contractor is pushing right there with me. And one other thing you brought up too about how the contractor gets paid, and I don't know that matters too much to our crowd here, but depending upon the type of loan, it changes the dollar amount that we can disperse, but we will disperse funds at closing for the contractor to serve as a deposit. So we can do either 50% of the estimate or 50% of the material costs, again, depending upon the type of renovation loan that it is. So the contractor at one point used to have the expectation that they were sort of working dry, and had to have work done before they started getting paid. We've changed that. We're going to get them a deposit, and then we're going to pay them in draws as work progresses. Again, probably not too much of a concern for you guys. It's more of a concern for the contractor, and it's part of the conversation I have with them. But it is, worth noting, since you brought it up, Christina. And one other thing that I'll touch upon is just what happens. Like, some people have the idea that, okay, we're doing a renovation loan, so now these repairs have to be done, and then we can go to closing. That is not the case, okay? Understand that this loan will close with the house in its present condition. We're going to settle on that house. We're going to give the seller their $250,000 or whatever it was, okay? They get their money, they're out. Then that additional money that we packed into the loan, that $50,000 or what have you, gets set aside into a renovation repair escrow. The initial deposit goes to the contractor then at closing. We cut a check right to them at closing. And then the funds are just distributed from that account as work progresses. So the customer now owns the home, and they are now in the midst of a renovation project, okay? Whether or not the house is livable is up to them. They sort of determine that, what their threshold for pain is. But when that loan closes, if that loan closes today, July 17th, their first payment is due September 1st, and it's the full regular payment. They don't have a break on payments. There's not an interest-only period or a forgiven period. They're going to have their full regular 30-year amortizing payment that'll be due September 1.
I want to mention too, in case anybody's getting overwhelmed, once that house closes, you guys, it's just like a normal transaction. You guys are not expected to coordinate with contractors, coordinate with draws. Of course, just like any other client, you want to be there as a source of support so that if they need a referral, if they, have a question about their home, just like any other client. But when the deal is done, that's when, you guys kind of step out and, let Rob's team take over fully, and they become the contact. So after closing, if they do have a question with their draws and everything, you would want to redirect that communication back to his office, because he would be the one to handle those. And of course, just offer your ongoing support, as their advocate. But there's nothing that you guys need to do post-closing. You're not required to, be the gopher to do all of the things, because that's just not what we do. That's kind of stepping outside of the realm of your license. So just wanted to be very clear on that. You are not responsible for the validity or the performance of the contractors in any way. Also, a common question I always got was, well, my husband's a roofer. Can he put the roof on? The answer is no. No. Well, he owns a company that puts the roof on. If they're and the house is just in my name, it's marital property. There is a connection because your husband owns the company who puts on the roof. The answer is still no. So just so that you guys know that, you'll get that 100 times. Well, can we? The answer is no.
Yeah, that's correct. It's unfortunate in that, these loans or these types of homes tend to appeal to people who are the do-it-yourselfer or the contractor. And yeah, that's a common question. They want to do the work themselves. I'm not paying somebody to work on their own home, because what happens is they do the demo, and demo's fun. You get the wreck stuff. That's a way to get out all your aggression and frustrations. But they also have a day job that they need to go to. And especially if they're a contractor and they just spent 10 hours on a roof, on a day like today, they're not coming home tonight feeling like, rebuilding that kitchen that they demoed last weekend. So, what ends up happening is then we end up with a foreclosed property that's destroyed, so that's not the wheelhouse we want to be in. Now, I will say I do have a bit of a workaround for that is acceptable with HUD, so I don't have any issues telling you this. Generally speaking, that contractor, that guy who wanted to do the work himself, probably has a buddy that's in the industry as well who has his own company. If we put that buddy on as our general contractor, who buddy hires as his subs is not part of what I vet. It's up to the GC to vet the subs. So if he wants to hire our borrower as a sub, totally fine by me. Okay. I don't care about that. I don't get into that. He's taking the risk. He's putting his name on the line saying, I will get this house done for X amount of money. So it'll be on him and his issues, not on the sub. So bit of a workaround if you do have that kind of client that wants to do that kind of stuff. I think we are out of time. Again, I could keep going if you want me to, but this last slide just has kind of some ideas on, what you can do, what you can't do. Just think that pretty much anything like exterior wise, like as far as like lavish landscaping stuff, is not going to be allowable with a renovation loan. So no koi ponds, no in-ground swimming pools, no hot tubs, that kind of stuff. But if we're just doing like basic landscaping, drainage management, fences, that stuff is okay. But that's kind of it. Again, I don't want to monopolize everybody's time. If you do have questions about these, like Christina said, loop me in. I'm happy to have a call one-on-one or with your clients or whatever you want to do. And we can really kind of, get in the weeds and look at specific situations.
Excellent. Thank you so much. This has been really informative. And guys, if you're interested in getting more into renovation style loans, like I said, they were a huge backbone of my business. Like I said, back in 2010, 2011, 2012, I would definitely start now, because we are going to see the need for this. And I know there's quite a few people on the call here, Ty, Charlie, Linda, Rebecca. You guys all have properties that are listed that could benefit from a 203K buyer. So getting the knowledge around that, starting to market that appropriately. Because I can tell you that there are a ton of agents in the market right now that don't even know these type of products exist. Sorry. So I would definitely get your hooks around it now and start adding real value to your sellers listing who have these homes, who are, that the houses are in good shape, but maybe they just have a lot of deferred maintenance. Maybe it's, it was grandma's house and it hasn't been updated since 1972. This could really make a difference with those listings, and it really makes a difference with the buyers you have coming in too. So you being able to offer this as part of your service.
Yeah, send the listings over to Sarah. Send her the link, and we'll put together a flyer, something you can share on social media, and just kind of we'll get it out there for you, and we'll put together a good marketing strategy for you to help you sell that thing.
Yeah, and you can go ahead and you can put any of the comments in the agent remarks on the MLS. You cannot put it in the public remarks on the MLS. But if you put remarks that, renovation style loan available, please contact agent for additional details, see supplements in MLS. You can totally do that in the agent remarks. Now, when it comes to social media, as long as you're not crossing any boundaries of offering financing or quoting any type of payment, we do it a lot for USDA, 100% no money down loans available. Please ask us for more details. It's a really great hook for social media, and the MLS does not have the ability to police social media. So you can put it out there, you can put it out on Facebook, you just cannot put it on the MLS because West Penn is very picky, and you'll get the nasty gram with a $150 fine. So please limit those to the agent remarks only. All right. Any other questions before we go here?
Guys,
So
I got to
just
jump up on another call. I just wanted to say bye.
Bye, Sarah. Thank
Bye.
you.
Yeah.
So I do have 2 listings right now that I'm struggling with a little bit. So I could just send those over to you, Rob, or send it over to Sarah, or add you both to an email. One of them, I'm just having a hard time. It has termites. And it could use some updates. And the other one does need quite a few updates. So I could use some help, maybe advertising, to try to get those, to the right people.
Yeah, just you can email me. I'm RenoRob@novashomemortgage.com.
Reno Rob. I love it. Very
Yeah,
catchy.
they made that avatar for me with the guy with the big beard and the ponytail, which is kind of I have a little ponytail.
Yeah, and Rebecca, if you get that collateral back, if you send it over to me, I can send it out in the brokerage one suite. So we have about 30,000 different contacts in there as well. So if you guys ever want something specific sent out on an email blast, we can always send that out too, to kind of help push more traffic to that list.
Okay, great.
And,
Thank you.
Rob, I think you said that maybe Sarah handles the pre-qual side or something, or the qualification, the criteria. Is it differ from an individual wanting to get the reno loan as opposed to an LLC investor wanting to get it, or?
So because these are FHA and Fannie Mae products, I'm only able to lend on the individual. I'm not able to do something for an LLC or anything like that. So Sarah would sort of vet that person initially, and then as long as they're qualified, then she loops me in, and we kind of start our dialogue with the customer and you as the realtor.
Ty, if you want something for more of a commercial buyer, so whether they're doing single family, duplex, commercial style properties, you would want to reach out to John Boyd for that. He has products for those. He does my own personal financing with my income producing single family residential, and then the commercial as well. So you would just reach out to him. If you need his contact information, let me know, or you can shoot April a message on Slack as well. I'm sure she'd be happy. She's sitting here beside me. I'm sure she'd be happy to provide the introduction with John.
Sounds good.
He's
Thank
a good guy. Yeah, he could help you out.
All right, cool.
All right. If there's nothing else, we're going to go ahead and conclude. Thank you guys for joining us. Me and Rob will stay on the line here for just a few more minutes in case anybody has a question that they didn't want to ask in the group. As always, we'll kind of stay on here until everyone